Right. Morning traders, welcome back to Market by A. Ready? Am I here? Right. So, looking at the S&P 500, well, it closed at a new high yesterday above 6,500. Amid fresh economic strength and also tech-led momentum. So, I think a GDP abbreviation and also solid spending data has reinforced the optimism, while earnings from the AI-linked names like NVIDIA and also Snowflake supported broader participation. So, rate cuts expectation remain firmly in play, supporting this rally yesterday. So, I think for next week, I believe investors are waiting for the NFP and also the unemployment rate as the rate cuts expectation looms. I think somewhere in Friday. Right. So, looking at the China A50, well, it rebounded strongly, lifted by a rally in domestic chip stock after NVIDIA's uncertainty on the Chinese market, which also, I think, fueling the hope that local companies can step in. Well, I think this is a good thing for the local companies, right? So, I think at the same time, the instant flows and also uh, fund buying spurred the trade optimism, reinforcing the market confidence. Well, uh, the rebound I think feels a bit broad-based and not just attractive tech-driven. So I think it's signaling a more resilient tone to the market. So as such, we saw that the 2823 ETF is more relevant rather than the inverse one that I showed yesterday, right? So on the WTI crude oil price futures, well, it underwent a bullish move yesterday and closed higher, settling at around 64.6 US dollar. Uh, so this rally was driven by a combination of tightening US crude and also fuel raise, suggesting demand remained robust and also renewed supply concern after the um, geopolitical development. Well, I think a weaker US dollar further softened the cause for national buyers, while optimism around the economic growth boosted the demand. Um, I think sentiment, the overall tone is bullish right now, but um, we still keep our short position unchanged unless it went up and closed higher above the stop loss of our stop loss at 67 US dollar. Right. So coming back to Malaysia, right? So the PLI it closed quite flat yesterday at 1562 points. I think tracking the small dip in the PLI as well. Sorry, KLCI. So I think trading was a bit quiet with volume suggesting the consolidation phase at this moment. Well, I think short-term momentum is subdued and the prevailing trend remains strong. I mean, an upside move above the psychological resistance at 1,600 could uh, unlock bullish momentum towards our next resistance at 1620, followed by 1650, while slight below 1535 would raise caution in this trading as we have our stop loss at this level right now. And again, we still hold our positive trading bias at this juncture. So uh, I think investors right now are assessing the overall corporate performance in Malaysia as we are near the end of the earnings season, right? So I think, right, as I've mentioned recently, since uh, if we look at the thematic play, I think those construction, RE, and also DC are still valid to see towards the end of the year. However, I think in terms of trading perspective, short terms, ups and downs, right? Maybe we can take a look at tech and also some consumer stocks for pending breakout. So this is our watch list, and today we have added Fate Tech into the watch list. Right, so for our Malaysia trading stocks, today we have Faytech and also Renthill Utilities. So the stock has experienced a breakout formation above this 34-cent level. So with that, we expect that the momentum to remain bullish and the stock able to climb higher towards the next resistance at 37 cent, followed by 40 cent. If the momentum able to sustain. So if the stock break out below this 31-cent level and form a new low, this could indicate a near-term pullback and further, I think, breach this 21-day moving average. Right. So for Renthill Utilities, so the stock yesterday has breached or experienced a breakout above 160 cent on accelerated trading volume. So should the bullish momentum hold and continue to trend higher in the upcoming session ahead, so the counter potentially climbing towards the next resistance at 1.70 ringgit, followed by 1.80 ringgit level. So if it dropped below 1.50 ringgit level, I think this would open it off for the correction phase. Right, so looking at the FCPO, it slipped yesterday, falling around 0.9% to close at 449 ringgit per ton. The dip, I think, was fueled by the weakness in the soybean oil market, and also increased selling pressure from the stronger ringgit, right? So I think still Malaysia's export demand remains healthy at this juncture, though it was, I think, overshadowed by broader external pricing dynamics. Expect a modest pullback for this trading session to say 4,350 ringgit if no sign of bullish reversal appeared. We still hold our positive trading bias right now. Right, so I think that's all from me for today. Happy trading, everyone. See you guys next week. And I pass the floor to Vanessa. Thanks.
Thanks, Aiman. Good morning, everyone. This is Vanessa from RHB Warrant. So I'm just doing a quick recap over the Warrant's performance this week, right? So this week, I guess every one of us are excited for the quarterly earnings for a lot of companies. Okay. All right. So it starts from, what happened yesterday was we actually saw very high trading volume in Burma's outdoor core warrants in the market. So not only the mother share is highly traded, if you notice that the warrants are actually, for example, B Auto C46 issued by Maybank, there was actually a 12 million volume traded in B Auto C46. And you also have noticed, you must have noticed the change in this particular core warrant. It actually went up by 100%. All right, so for RHB, B Auto C49 was also highly traded yesterday. All right, so but there's one thing maybe you would not you'll be noticing is that the price change for B Auto C49, why is it so little compared to Maybank, right? Okay, all right, so first thing first, definitely is due to the effective gearing, but it's different. But secondly, maybe I'll just bring your attention to the price of both of these core warrants. You'll be able to see the core warrant, like for example, Maybank B Auto C46, that the bid price is at only 1 cent. All right, and while for for C49, the bid price is at 4.5 cents. All right, so this actually could mean that for B Auto C46, before this it's already been far out the money. So it means that it's almost worthless for this call warrant. So it might be priced at around half a cent or 1 cent. So normally for warrants like this, right, the issuers would actually widen the spread. So you will be able to buy at 2 cents, while the fair bid is only at half cents or maybe just 1 cent. All right, so the volume is highly traded. It could be people buying at a very low price if they could actually buy it on the market, but not from the issuer if they have widened the spread. On the other hand, it's like, or maybe most likely some of the B Auto outstanding holders means that they have been buying B Auto C46 for a very long time, and finally yesterday was the day that they actually sell it. Okay, so with this you have to first notice is you have to first pay attention on the sensitivity to see whether it requires many ticks for it to reflect the movement of mother share. So in this case, B Auto C49 would be the best choice if today you are still bullish, but not sure. Okay. All right. So B Auto C49 by RHB, as it's currently at the money, I have actually used this as B Auto price 69 cents, and then B Auto C49 has exercise price that's very close. So we call it at the money, and currently at a fair bit of 4.5 cents. Okay, so that's for B Auto. So another very crazy, another very highly traded stocks would be Sime Corp. Okay, Sime. So this is actually a snapshot for Sime Darby, Sime C93. Okay, so I will just share with you on how you look at Sime Darby warrants. Okay, so C93 was one of our very highly traded warrant the days before. So you also have noticed that the gain is from half a cent to 3 cents. So it's like about 5 folds. So 500% on Sime C93. So this is what happened the same as well. The price was very low at half a cent, and then due to the gain in intrinsic value slowly, after the share price moved up, so it actually went up to 3 cents. Okay, so for another example, I think last but not least would be DRB Highcom C3Q. So yesterday, this was actually the gain from 4.5 cents on 27 August to yesterday closing at 8 cents. So it there's a gain 15% in the mother share, while the warrant actually gained about 78% in the bid price from 4.5 cents to 8 cents. So this is due to the effective gearing of 4.5 times, which means 1% movement in DRB Highcom mother share could cause 4.5% movement in C3Q call warrant. All right. So for all of you who would like to invest in call warrants, regardless DRB Highcom or other warrants like upcoming you'll be paying attention on Inari reports and all, then you have to use the price metrics to identify your entry and exit point. So first, identify your strategy, whether it's going to be a short-term, mid-term, or long-term. But for warrants are usually short-term and mid-term. Then you have to use the price metrics to identify what's the price for the warrants. All right, so that's all from me today. I'll pass to the next presenter. Thank you very much.
Thank you, Vanessa. Let me just move on to result review on Inari Amerton. This is a full year FY25 numbers. Core earnings of 255 million, which was down 17% year-on-year, were actually within expectations. The slower earning numbers were actually dragged by bigger revenue, small slight margin compression from the forex, as well as startup loss in its China operations. They declare a fourth interim dividend of 1.2 cent compared to 1.4 cent in the fourth quarter of FY24. Now, revenue traded about 6% year for the full year to 1.35 billion. The RF segments contributed 65% to the revenue, followed by power electronics of 29%, while the legacy IC packages was about 6%. The margin was down to 24.3%. It was 25.3% in FY24. This is on higher fixed costs and on various new product development, its China venture, as well as unfavorable forex movement. For context purpose, I think we venture incurred about 16.1 million startup loss in the full year. In terms of the outlook, I think we should benefit from stronger contributions from the fiber optics segments into FY26, while the growth for its RF segments will hinge on the uptake of new smartphones. However, the utilizations of the RF packages may see a longer testing time year on year, despite the lack of content growth. Now, in the meantime, we expect the JV will likely to be delayed in terms of the ramp up due to the competition seen in Chinese OSAT market and the slow client acquisitions. Whereas on the partnership with Sanan Optoelectronics to acquire the Millets, we are neutral on the development over the short term, but positive over the medium term, as this will enable Inari to diversify its revenue stream, as well as grow its capabilities in the manufacturing, as well as ramp up vertical integrations. Now, no major change to our forecast, with only a minor model adjustments post the full year numbers update between about 24% and 3% of FY26 and FY27's earnings. We released our TP to 2.54 from 2.45. This is after we roll forward our valuation base year to FY26 itself. Our valuation is pegged to an unchanged 31 times PE, which is around 1 to 1.5 times standard deviation above its 5-year means. The price is inclusive of a 2% ESG premium, as its ESG score is higher than the country median. Now, we think the current share price weakness represents a good opportunity to position into one of the good OSATs in Malaysia, where the RF packages on its flagship model, as well as its pivots to the growth areas such as the advanced packaging. To buy the stocks, target price of 2.54. That's all from me. I think I'll pass on to the next presenter.
Okay, morning. We have a update on Axiata. This is basically the results note. Fourth quarter numbers, maintaining our buy call target price in terms of SOP up slightly to 295 from 270. In terms of the first half core numbers, broadly in line. Core earnings, if you adjust for a whole slew of one-offs, forex gains, accelerated depreciation charges, linked net goodwill impairment, number came up to about 342 million. It's about 46% of our full year forecast, consensus about 55%. Just to note that the quarter basically includes a consolidation of Axiata. This particular mobile unit was flocked off sometime in mid-April. And there's also 6.5 months of E.co Myanmar, which was basically the tower subsidiary over in Myanmar that was divested on 15th of June. Overall, results were in line. We think that they will continue to pare down the whole core debt, which is basically sitting at just over 7 billion currently. You've already seen that interest savings come into play. Year to date, interest savings are down. Interest financing charges are down by about 27%. Interim dividend of 5 cents declared. Basically, they are on track to meet the 10 cents DBS dividend per share guided for the full year. Very quickly, in terms of the operating numbers of the opcos, I think if you look at overall revenue, it slipped 10%, 8.5% in terms of beta. That's because of the appreciation of the ringgit against most of the operating currencies, specifically that of the Bangladeshi taka and the dialogue currency as well. Patami more than doubled in terms of E.co's numbers. That's really coming from lower interest cost. So if we look at frontier assets, Dialog, Robi, and Smart, exhibited fairly resilient set of numbers. Sequential EBITDA growth there between 6 to 21% Q on Q. Some market repair in some of these markets, particularly that of Dialog. It's happening as we speak. So we've seen a bit of ARPU uplifts for consumers. Boost, the digital financial services arm, EBIT losses basically widened Q on Q. That's really coming from both bank and non-bank incrementally higher cost. In terms of the associate, you have the XL Smartfren, which is booked from middle of April, and CelcomDigi, which is the other listed mobile network operator that they own, basically fell 557% Q on Q. That's really due to the one-off accelerated depreciation charges recognized at the XLS level. Group debt has basically come in lower, 23% Q on Q, 31% year on year. I think for this quarter, they've actually repaid about 1.1 billion loan at the whole level. Part and parcel of the overall strategy to actually deliver the balance sheet. I think they will continue to do this over the next 12 to 18 months. If you look at the strategy, they intend to actually reduce net debt to EBITDA to 2.5 times by FY26. Net debt EBITDA currently in terms of the second quarter number is 2.76. So it's fairly close to that 2.5x target that they're having. I think one of the key re-rating catalysts for this stock really is value elimination of some of the assets. I know they've talked about this for a while, specifically that of the tower business, E.co. If you've read the news out in the market, this particular asset is up for sale. In terms of the actual mechanics, we just have to wait and see. There are not much of the comments made by the management at the results call yesterday. Pretty elusive in terms of comments made. I think the process has started, and they're still basically sussing out some of the investors out there. Now, if you look at E.co in itself, I think it's a fairly decent asset. One of the biggest tower cos this part of the world, Southeast Asia. If you look at the valuation in itself, 8 to 12 times EV/EBITDA multiple is probably what they're gunning for. That could potentially value that particular asset between 6 to 13 odd billion. So a fairly sizable asset there. And the proceeds from the sale can be used to actually deliver the balance sheet further. So post-results call, we've made some adjustments, very minor adjustments in terms of forecast, basically on housekeeping and also to factor in the sharper than expected drop in terms of the interest financing line. So we've increased our target price in terms of SOP to 295 from 270. Gives us 40% upside, about circa 4% dividend yield. So we're maintaining our buy call on the stock. Okay, I think that's all from us for Morning Kappa today. Have a good weekend and a good long Merdeka weekend. I'll see you again next week. Thank you.